When you stay stagnant, when you stay stuck in your ways, what happens is you want to be right and you don't care about the truth. The market does not care about you. It doesn't care about your feelings. The name of the game is getting the bag. The name of the game is improving your quality of life. And the only way you can do that is by by profiting. And the best way to profit is by removing your emotions and paying attention to things and trading and investing with the market. You obviously want to pay attention to projects that they have money in the market. But when you see that downward tick on the MFI, that's like, okay, money's leaving the market. So maybe we're going to start to see a loss of liquidity or some other things, so there's that. But when we're talking about EMAs, like I like to use exponential moving averages because they move a little bit faster than moving averages. And the really cool thing about it is in crypto, we want to use faster indicators because crypto does move a little bit faster than traditional stocks. My go-to exponential moving averages are the 9, the 21. I'm visualizing in my head right now. The 9, the 21, the 30, the 50, 100, and 200. And an ideal setup that I like to see them all propped upward like this and price action going that way.
Solana, somewhere around September last year, started to pump. That was the first time it started to go up. What were you doing at that time when it was moving up?
Okay, I got into Solana a little bit late. I started buying under $40. I want to say around that time period. Again, you guys, please don't quote me because I don't have my chart in front of me. I don't have my trading journal in front of me, but I just know I was buying. I want to say it was in the summertime. I was buying when it was around $40 and under, maybe like $25 to like $45. And so I rode it all the way up to about $104 or $102. And people are like, I can't believe you sold. I can't believe you sold. And I didn't sell all of it. I did my famous strategy. It's called the moonbag strategy. So that's basically when you're up on a project, when it's like 2 or 3, 4 times, whatever, you sell half on a double. So you remove your profit, you remove your initial investment, and you have the rest of the asset. And you can continue to take profit as it goes up more, or you can hold on to it. You can stake it for the passive income on the centralized exchange or a DeFi exchange, whatever you want to do. And it kind of just depends on your needs.
That Solana, that was part of your trading portfolio, not really your investing. That's why you were okay to sell it also, and even your moonbag strategies mainly for trading.
Yeah. So I still have it. So now it's part of my long-term investment strategy because the bag that I have, I own free and clear. And we're still above my buy-in price, I believe, which was at, I think I have to look at a chart, but we're still kind of above that price. But either way, it's something like if Solana does go to zero, that investment that I have, I essentially own it free and clear because I've removed my initial and I've removed my profit already. And I'm actually kind of making money on it because I'm staking it on FTX US and I earn 8% back on it. So I'm making money by just holding a bag that I own for free there, which is really cool.
And I think that's what a lot of people don't understand as well. It's different when you are investing profits because you can take in more risk versus you're investing something that's fresh from fiat that you transferred and you're buying. That I think puts a level of fear for a lot of people, especially if that's something that was freshly swapped from fiat, and the volatility might be a bit harder for them, unlike someone who, okay, I managed my money well. I was able to properly spread it out, and whatever happens to this current position, it's just a bonus already for me. And it's amazing for you having that mentality in this type of environment where a lot of people are not thinking about money management. They just want to, I'll invest, and whatever happens, if it goes to the moon, I'm really, really good.
I've done some stuff like that. I've done some risky things too. Sometimes it paid off well, other times it didn't. And I just think it's important for people to know, like a lot of people just want to invest in all these different crypto projects, like, cause it's the lottery. And yes, some of the stuff can go to the moon. It can do incredibly well, but at the same time, you have to be so careful. The market doesn't care about you. It doesn't care about you and your feelings at all. The name of the game is making money. And the way you make money is you have to remove your emotions and you have to have a plan. And obviously it can be hard to kind of stick to your plan, but at the same time, you want to do the best that you can because you're putting your money into something. Like, even if it's house money, it's still your money. And you want to make sure that you de-risk as much as possible. And like the moonbag strategy I have, where you're removing your initial investment, you're removing your profit. The reason why we do this is because you still get a little bit of stake in that particular cryptocurrency project because you still own some, but you own that bag free and clear. There's no risk. So if it goes to zero, that stinks. But then if it does really well, it makes you $1 million. Yay, that's awesome. But at the same time too, you want to take that capital, like you want to replenish, even if you started off with $100, you want to replenish your original $100 $100, like, do something with that money. Or you want to take that $100 because it's still disposable income and the profit that you made, take that strategy and then rinse and repeat into other projects and continue to do that over and over again. Obviously, you are going to have losses. There's going to be things that happen, but at the same time, small gains do compound. Like compounding gains is a really, really great strategy. And a lot of people don't like, a lot of people think it's get rich quick, and it's not. It takes a long time of rinsing and repeating and doing this stuff over and over again. And then you eventually get a bigger bag and you can like treat your family and do really cool stuff for yourself. Maybe buy a home or property, take your partner on a magical vacation somewhere. But that's just by utilizing disposable income and just practicing risk management. Even if it's small gains, like who cares? Even if you started off with $100 and at the end of the year you made $1,000, and then you have all these assets that you're making them work for you, and you are staking those or whatever. Or if the market does well, you can continue to take profit on those. Or if the market goes to zero, then at least you paid yourself, and you at the end of the year you have $1,000. Like that's pretty cool that you're able to 10 times your money and then have all these different investments.
I like what you said, that you rinse and repeat. What that gives you is two things: experience and conviction. We can learn as much technical analysis as we want, we can watch as much videos as we want, but experience and conviction happens when you actually execute. And it's okay to make mistakes when you trade, because that allows you to get better. Even if you don't do well in year one, if you're like in your 30s and you have like 50 plus years of investing, what's 1 year or two building the ropes, whereas you have your whole lifetime to actually get better and maximize your learnings on your first 2 years of investing.
Right.
I want to drill into conviction, and I want to talk about certain tokens and coins and your convictions towards them. Number one, the OG coin, Bitcoin.
Bitcoin, I have no problem holding long term because I do think it will perform well. And like Bitcoin is more than just making money. It's really a kind of a movement about freedom, being self-sovereign, and kind of pushing education to yourself. I mean, realistically, Bitcoin forced me to learn about traditional markets and learn about different things that were happening in the government. So I think that Bitcoin is a great tool for people. It also is a great, it's kind of symbolizes freedom for us. So I have no problem holding Bitcoin long term. But of course, you don't want to just like mortgage your house and buy all this Bitcoin. You want to, practice different things, maybe dollar cost average, or whatever it is. Like do whatever works for you and your family. Don't ever overinvest. It just that will never, ever, ever end well.
Drilling deeper, store of value or currency of the future?
Store of value.
Got it. Now, there's so much talk about halvening cycles, right? And there's so much perspectives about it. And what I'm actually thinking is that by 2024, of course, the what gets mined becomes lesser. But I'm actually thinking that there's so much supply already out there that what gets mined won't have as much impact to the supply that's out there already. Plus, the institutions that are in right now versus when Bitcoin was starting out. I guess my question is this: the 4-year cycles, how do you see it play out? Will it still have as much impact as what it had in the previous years? And second, the very, very controversial stock to flow. Where are you on this?
The stock to flow, I think, is outdated. That's all I'm going to say about that. And also, too, I'm going to give you a very controversial answer to your question about the 4-year halvening. I don't know. I'm going to be 100% honest with you. And this is why I'm going to explain why. Number one, I don't talk in absolutes because I think that speaking in absolutes does a disservice to investors and traders. And the reason why is because the market changes, things change over time. And a good investor and a good trader and somebody who remains rational and open-minded and kind of observing of different things that are happening, I think that they're going to do better at trading and investing because they're not stuck in their ways. When you stay stagnant, when you stay stuck in your ways, what happens is you want to be right and you don't care about the truth. The market does not care about you. It doesn't care about your feelings. The name of the game is getting the bag. The name of the game is improving your quality of life. And the only way you can do that is by profiting. And the best way to profit is by removing your emotions and paying attention to things and trading and investing with the market. So the reason why I think that I don't know if the halvening is going to kind of dictate if we're going to be in a bull or a bear market is because prior to 2020, the summer of 2022, we saw DeFi summer. We saw all of these amazing projects kind of pop up. Things were going crazy. They were going wild. Everybody was making money. And also too, we saw ecosystems that were actually working, like decentralized exchanges. They were working. Staking was working. Farming was working. Pools were working. There's all these great things that were bringing all this yield and value to people. Back in 2017, we didn't have that. In 2017, if you wanted to buy cryptocurrency, you had to sign up for Coinbase. You had to get KYC, Coinbase or Gemini, I believe. You had to Coinbase or Gemini. You had to wire money in. It would take 7 days. Then you had to take that money, buy Bitcoin, send it to a Bittrex, send it to Coin Exchange, send it to Cryptopia. Some of those exchanges aren't even there anymore. And then you had to buy and invest in altcoins. And if you wanted to cash out, you would have to send back to Bitcoin or back to Coinbase, back to Gemini, wait 7 days for the wire to transfer out. Now I literally have my cell phone. I can get my cell phone. I can type in my credit card number to any of these exchanges and buy crypto whenever I want, And that right there has completely changed the game in the market. It really has changed the game in the market. Plus we have NFTs, we have metaverse stuff, we have play to earn stuff. So the ecosystem is so big and robust now that may cause different things to happen in the market. Like with DeFi, for example, we have a lot of money locked up in DeFi. Prior in 2017, 2018, we didn't have that. So I feel like that kind of helps the market kind of stay afloat to a certain extent. NFTs, you can actually, like, there's so many use cases and so much money invested in NFTs that I think that those right there change the game a little bit. So I could be 100% wrong. We can definitely still continue to follow the halvening cycle, but at the same time, I don't want to be like narrow-minded and big, we're going to follow the halvening cycle when potentially that narrative may break because the market has changed. So I am not saying that the halvening cycle is not going to be a factor in the coming years, but at the same time, I also want to talk about some of the changes that we're seeing and acknowledge those and take those into my investing and my trading strategies.
And you nailed something that's very, very, very significant, because people always look at the price. But I like what you said there. There are platforms being built around it, but not just that. In 2022, we now have actual users actually using it.
Yeah.
But here's what's more interesting about that. We're seeing the greatest minds, the greatest mathematicians, programmers, developers, editors, graphic designers move into this space, the whole Polygon Studios thing, where you had someone from a very, very traditional company move into something that's very, very new, already speaks volumes. Say that, okay, the price could be volatile, but the development, it just keeps moving forward. And that's something I think people should pay more attention to as well, that as a technology, we're not going back from here. It's just a one-way street. You mentioned about DeFi. DeFi right now, to be very, very kind, it's not anymore in its glory days.
Right. Right. But this is the thing. We're talking about an industry full of entrepreneurs. Yes, there's bad actors. Yes, there's people that do things that are unethical. But at the same time, most people in crypto and DeFi, they do want to create really cool stuff. And the entrepreneurs, the reality of entrepreneurs is most entrepreneurs fail. But we saw this in 2017. We saw these great projects come up, and then eventually they went away. And then, but the foundation that a lot of them left was very, very revolutionary for the space. So that what happened was people were able to kind of go back, either revive some of those projects or revise them, or kind of build on top or with them, whatever it was, to create new and better things. And you have to remember, we're in an industry of builders, people that are able to build all these cool things. So DeFi is not in its glory days right now, but I think it will be again. You can't argue. Well, you can argue all you want, but you can't deny that people want to have control of their money. They want to have control of their finances. And they're just really, really tired of people that think that they're above over here telling them and dictating what they can and can't do with their money. And that's why DeFi is so important. So DeFi will always be around, but it's just kind of hard to find, solid projects, especially in a market downturn.
That being said, would you consider the ones that are relatively stable already, like the Aves of the world, given that it's a bit lower than where it was, and it's one of the biggest and most solid projects as well? Should the focus be there, or the ones that are still up and coming?
I think it's important to pay attention to a lot of different things, but you don't want to have all your eggs in one basket. And that's why I like the moonbag strategy, is because if there's a project you really, really, really like, invest in it, try to create a moonbag out of it to where you remove your initial investment or profit, and then move on to the next, and like kind of diversify that way and try to do that. And the reason why is that you're kind of diversified, you're kind of hedged, and you're able to kind of explore different ecosystems, because something may end up working out really well that, like, that you saw and you ended up investing in, it might have paid off really well. So it kind of just depends. Like obviously the whole do your own research is kind of a meme at times, but it's very, very true. Everybody should educate themselves on different parts of crypto, because what happens is sometimes we don't pay attention to projects, and all of a sudden they end up doing well, and then we feel like, oh my gosh, I missed it. So I think it's important to pay attention to different things. One of the things that I recommend to people on CoinGecko, which is a free website, it's very similar to CoinMarketCap, basically tracks all the different cryptocurrencies. We have all these different sectors now, all these different blockchains, which are really, really cool. They have a sector to where you can look at the different ecosystems, but you can basically see all the different chains and all the different ecosystems. And let's say that there's a chain you really like. So for example, you like Cosmos Atom, or maybe Solana, maybe Avalanche, maybe Terra Luna, and you really like that chain. But then you want to kind of explore what's in that ecosystem. You want to explore what's in that ecosystem and see if it makes sense.
ETH versus Bitcoin. Will ETH flip Bitcoin, or Bitcoin will still be the top dog?
I don't know. Right now, Ethereum, they just changed. They said that they're not going to be doing ETH 2.0 or ETH 2. I have to kind of I'm not going to speak on that too much because I'm not the biggest tech person. So I really have to go back and read and realize what's going on. I covered it briefly, but I had a friend, I read it, and I had my friend kind of do a segment on my show explaining it because he's an actual miner. So I have to go back and watch and, come back on your show with you and do some more research on that. Because again, I'm not the most technical person, but Ethereum does have a lot of scaling issues. So we'll have to see what happens.
Since ETH has a lot of scaling issues, any of the ETH killers you think has a really, really, really big chance to beat Ethereum?
Not today.
Mainly because of the network effects, or the number of people that are there, the NFT projects.
Solana, Terra Luna, Cosmos. What am I missing? I know I'm missing a lot right now. Binance Smart Chain. I feel like we just kind of need time to see what is going to do well and why they'll do well. I don't think it's safe to say that anything is an Ethereum killer. I think we need time to kind of determine what is going to end up doing well, and that's with being accountable and proving themselves.
That's what's so interesting about those L1 blockchains, is that they're a network, and sometimes when more people will come in over the next decade, they may not really care what network they're using. It's just us that are early, but I think what will win is interconnectivity between all of those networks, the ones that allow you to have maybe a faster and cheaper route that connects to all of them. But it's like what you said, it's still too early to tell, and Ethereum is still the biggest as of this point in time.
People are always like, Wendy, what do you think the price is going to be in 5 years? I'm like, I don't care what the price is going to be in 5 years. I just want the community to thrive, and I want to see a really cool ecosystem emerge out of it, so that everybody can earn money just by playing games and having fun and doing that type of stuff.